$11.9 is the GRM. Actually, tell you something, that's way above estimate, because the estimate was about $11. Now 11.5 was the last quarter's GRM number, so this time it's above that. Prakash, that's one number that we have, a GRM number 11.9.
No, I think phenomenal. I mean, you know, it's not just an ordinary surprise which you could just kind of gloss over. This is intriguingly surprising, because 11.9 and that too in an environment, as I said, where it was expected that there would be pressure on the GRMs because of the you know, the differential between sweet and heavy crude. And you know, mind you, Reliance has had this ability to do two things remarkably distinctly well. One is the quality of crude that they can actually bring into the refinery, and the throughput that they can generate. It's phenomenally, you know, the margins that they can make is much better than any other global refineries as well. Secondly, their inventory management has been up to the mark all the time. They managed the you know, volatility in crude, which has of course been on a softer side this time. And this time, what I would believe, and once we get the details on these numbers, Anuj, what's contributing to the refining, the positive side on refining again, is the capacity utilization. I mean, where do you get on a scale like this 120% and 118%? So as Mr. Tulsian said, you know, those things are where they distinctly set themselves apart, set the bar higher. Yeah. So absolutely surprisingly positive.
Presh Jain is also with us. Presh, you have seen the initial numbers. Your first thoughts, the GRM of 11.9, and both refining and Petchem prima facie look higher than estimates.
Definitely, Anuj. These numbers are substantially better than what we were expecting. In fact, I was on much lower side in terms of GRMs. I was focusing around $10.5 per barrel. And sequential jump in GRMs is, no one would have thought about a sequential jump in GRMs for Reliance in this quarter. And they've delivered exceptional strong numbers, both on, in fact, if you look at the EBIT margins of the petrochemical segment, they are highest since possibly FY09 or sometime thereabout. They had hit that 16% mark. So it's a phenomenal performance in this quarter operationally.
Okay, so well, let's put these numbers once again on board. And you know what, Mr. Tulsian, you know, while we are only talking about the refining performance, and you know, I wanted your thoughts also on this $11.9 number, which clearly is a beat. Even the Petchem actually is above estimates. It may not have beaten the estimate by as much as refining, but that also is a solid performance.
See, Anuj, for Petchem, it was expected that this will be good, but you are right. Maybe because we have estimated EBIT profit of 3,600 for Petchem, which has come at 4,000 crores. So even there you have seen a beat of 10% higher. 10% higher is phenomenal, 150 basis point increase. But yes, coming on the GRM, because if you see the Singapore benchmark, that was at 6.4. That means we have not seen any, it was unchanged on a sequential basis, because even in Q4 also, Singapore benchmark was 6.4. So, but because of generally what happens, you know, because we have seen 7% fall in the crude in this quarter one. So what happens that whenever crude falls, the small oil producers, you know, that gives a good advantage to Reliance Industries, because being a cash-rich company, to acquire at a very bargain price from them. So we have factored in that, and in fact we have estimated a GRM of $11.1, but 11.9 is again, you know, way beyond. That means the differential between that means the advantage of the procurement of the raw material and the better product realizations. Both must have seen, you know, getting reflected. But in spite of that, if you calculate that 11.9 also, then also the absolute number of 7,500 crore, that is 76 crore, is really way above, quite high. That means they must not have incurred any kind of inventory losses also. So that's again phenomenal, because as I said, there was about 7% drop, $4 per barrel on an average basis in this Q1. So even that must not have impacted them much. Yeah.
Okay. Well, so Prakash, the stock has rallied a lot already, right? I mean, of course, and in the past also, the numbers sometimes don't have the kind of impact on the stock. But tomorrow morning, we have AGM also tomorrow, by the way.
Yeah.
So tomorrow morning, first thoughts. Before that, just a word on some important news which also flashed. Let's pull out the chart of Balaji Telefilms. Reliance will be investing 413 crores in Balaji Telefilms, and they are picking up stake at 164 rupees per share. Now, it's interesting with Balaji Telefilms, because what happened with Balaji Telefilms was, we know star, parted company, and of course, recently we saw the CEO quit, so that was quite interesting. But ever since that Alt Balaji was launched, it's been a stock which has stunned many. So Balaji Tele would be also interesting stock to watch out for. First thoughts on Balaji, then we move on and talk about Reliance.
So I think Balaji's got probably everything going for itself now, and this was probably the cherry on the cake, for the simple reason that the Alt Balaji platform has seen such quick traction in such a short span of time, and this is the game on content now, which is unfolding. So we are getting into an age where Jio will have to look at content, back-end content, sourcing, and then Balaji is a great fit in terms of the GEC material that they produce. So I think Balaji will, of course, have wings coming back into this thing because of this announcement. But it also gives you an indication of what Reliance is looking for to grow the Jio business going forward. So there's going to be enough expectations around some more names as well, Anuj, to come tomorrow morning. You'll see a lot of media stocks coveting that interest just beyond Balaji.
Yeah. Mr. Tulsian, your thoughts on Reliance investing in Balaji?
See, Anuj, actually this was speculated by the street for last 3 days, and actually I was waiting for that to get seen in the Reliance number which has come out today, because even my media was speculating by Z Tele as well as by Reliance Industries, but Z has denied it. Actually there was no logic of Z buying anything, because Z themselves have their good library and all that. So yes, now the focus of Reliance Industries will be to aggregate the contents, or to source the content from all the producers. And but I won't be taking a positive call on Balaji Tele from here on, because firstly the allotment has happened at about 164, 165, and the share has already seen a good run up. It has hit a high of, I think, about 195 and now have corrected to 185. So probably it should settle within that range, because 400 plus crore infusion is definitely seen positive because of their alt, that liability, that library which they've created, alt Balaji. So that will this news has largely been factored in Balaji Tele, that maybe that stock may see profit booking. But again, yes, the focus of Reliance Industries is very much there on to ramp up the Reliance Jio going forward, and as a to source the contents. This move is seen quite relevant and rational.
Okay, relevant and rational, but that's a side issue. Now let's focus back on the main issue. Let's take some thoughts on how the stock could move from here on. Mr. Tulsian, your thoughts?
See, Anuj, if you don't look to the price chart of Reliance Industries and the way it has moved up, probably I would have said that the stock can rise by 6 to 8%, just looking to these numbers. But definitely the stock should be positive. But having seen such a big run up, and probably that has been, market has taken has had the whip of these good numbers, and because of that the stock has risen. But if I shut my eyes to the old price behavior, I would have said that the stock would have opened with 6 to 8% higher, but that won't happen now with these numbers. But still it should open higher, maybe by about 3 to 5% tomorrow. Yeah.
Okay, 3 to 5% could happen tomorrow. Sudeep, your thoughts on where the stock could move on from here? It's rallied a lot, let's not forget that.
Yeah, but the company has given a very good set of numbers. If you look at the standalone numbers, your EBITDA is around 113 billion against our expectation of 112, and your net profit is around 82 billion against our expectation of 81. So it has given a positive surprise, and we have maintained our buy rating on the stock, and we continue to have a positive view of the stock.
Okay, Priyesh, how would you approach the stock?
Yeah, in fact, Reliance was a part of our top picks. And I think if we would retain that, we earlier had a target of 1650, possibly we might evaluate the target as well, because in an environment where the things are not conducive, they have delivered $11.9 per barrel GRM, and now things are likely to improve with gasifiers, Petco gasifiers commencing operations, and the new Petchem projects commencing operations. So all those things actually can lead to more upsides to the forecast that's there on the street. So possibly more upsides from Reliance can be seen from here on.
Okay, Prakash, how would you approach the stock? Tomorrow is the AGM as well.
Absolutely. So I think the expectations are only going to grow now. And if Reliance, and possibly these numbers and the setup that we are in probably also condones the absence of the Jio contribution, which seems to be kind of right now missing from the entire P&L. And I think the stock will now form 1500, 1525, the current market levels will probably form a very strong base. I don't see the stock going down, even if the market were to see profit booking in other heavyweights. Reliance probably only has one way to go, and that's up. Whether it's 3%, whether it's 5%, or maybe 8-10% in the next few weeks, I don't see a bottom, pressure on the downward side tomorrow morning onwards.
Okay, so that's the Mukesh Ambani quote, which is running clearly. He's happy with the numbers. Now, looking at the other press releases also with me now, the refining number is 17.3 MMT versus 17.5 MMT. So obviously the volume has fallen a bit, but the GRM is at 11.9 versus 11.5, and the EBIT margin in terms of percentage is 11.2% versus 8.7%. As far as Petchem is concerned, for Petchem the production is up from 6.2 MMT to 6.5 MMT with a margin of 15.8% versus 13%, which means a segment EBIT, as I said, of 4,031 crores. Oil and gas, of course, is immaterial now. Organized retail segment EBIT of 292 crore versus 243 crores is what we have. Then, of course, they have given the numbers for Network 18, which is, of course, the the producer of the channel that you're watching, and those numbers are already in public domain. Ms. Tulsian, any more thoughts on the numbers, that the throughput numbers and the production numbers that I read out?
See, Anuj, actually there's a bit, I'm little disappointed with seeing the crude throughput falling to 17.3 billion ton. But actually, again, it has a brighter side also, that in spite of the fall in the crude throughput, that means the capacity utilization has been effectively at 113, 114%. So in spite of that, in fact, what market will really be cheering is the expansion of about 150 basis point in their core business. See, Petchem and refinery. You may take a call, because I don't think that anyone is really factoring any kind of sharp jump in the Jio profitability, or maybe from the small businesses, maybe like media, or maybe like other companies like Network 18 and all that. But if you see 150 basis point jump in your refinery as well as in Petchem, with refinery I think will now always remains in the double digit, and Petchem will always be 15% plus kind of EBIT margin. That will just be changing the structure and rating of the stock on a sustainable basis. But as I said, that since the stock has also moved up quite a lot, but still I'm keeping a positive move, because I am highly impressed. And as I said, that even if you knock off this extraordinary item and take the 20% tax liability on that amount also, then also the bottom line is 8,200 crore. So courtesy again, better profitability by about 300 crore or maybe 400 crore from these two core operations, which should really excite the market. And I'm quite positive on the stock, taking this core business performance.
You want to make a point, Prakash?
Yeah, so just on the same lines, Anuj, what the market would now do is, we've seen the EPS for the whole year, consolidated basis, it was about 100 plus. People have been according a 10 to 12 kind of a multiple as a base, and then sum of parts from the other side. Now you have, you start having a quarterly EPS of 30, and the run rate, even if it maintains at this level with a mix of GRMs, refining and Petchem, you're talking about at least a very clear 20% upside on the upward revision on the EPS targets, and that in an environment where the company started doing the right things in terms of its cash flows with Jio. So you could very easily have targets coming in the range of about 1,700, 1,800 very soon for the next 12 months, and that's what propels these kind of stocks which have been underperforming for some time and now getting into their own. So thankfully, Reliance could probably pole vault the Nifty into that 10,000 zone tomorrow, given the market opening. You have 2.5 hours before the AGM is announced. So I wouldn't be surprised if Reliance...
Yeah, the 10,000 mark tomorrow.
Reliance would contribute, if it's 4-5% of a move, it's enough to carry the market and get it in the right mood to pole vault into that 10,000 mark, not crawl to the 10,000
Yeah,
mark.
but the problem with that is, Prakash, we have seen this in the past as well. Reliance comes out with this stunning number.
Post-results, yes, I agree.
Post-result, next day the stock actually declined.
Yeah, but here there's a big event lined up which has also expectations in terms of, because of the anecdotal this thing of last year's AGM, right? So if that were to be any indication, people would probably, not sell off even at a rise tomorrow when it opens at 9:15.
You know what? So hypothetically, let's see the first trade tomorrow, Reliance rises say 4 or 5%. That's a outlandish assumption to begin with. But suppose it does that. In that case, that would contribute about 40 points to the Nifty, which would mean 9,900. So the rest of the heavy lifting will still have to be done by other stocks. But Mr. Tulsian, do you get a sense that this stock could move towards its previous all-time high? I mean, it was in 2007 or 2008 that we had that 1630, 1640 kind of high.
See, Anuj, 2 or 3 things. If you take a fundamental call, I'm expecting 111 as the EPS for FY18. I don't understand why market should not give a P multiple of 17 or maybe 18, because now it's an integrated play for both, and both the sectors are enjoying that kind of. One may argue that refinery has a lower P multiple of 12, 13. I agree, but Petchem should deserve a higher P multiple of maybe 17, 18, 19. Then they have the financial portfolio. If you recall the olden days, maybe a couple of years back, the financials always used to get the lower multiples, but that's not the case because they have the financial income also, treasury income. Now come on the telecom. Telecom again falls in the P multiple bracket of anywhere between 15 to 18. And if you treat Reliance Jio as the leader amongst the telecom space, I think on a blended P multiple basis, the company should get a multiple of maybe 17, maybe 6 to 8 months down the line. And if I have 111 as the expected EPS estimates for FY18, 111 into 17 times, you have a price of about maybe 1870 or 1850. And coming specifically on the point of the behavior tomorrow, as I said that in spite of, you are right that always post results, in spite of having seen good numbers on many occasions, the market has not responded. But I am hopeful because the kind of undercurrent and the sentiments which has been prevailing in the market as well as on the stock should reflect better. But again, which I have maintained all along, that probably 10,000 may not be seen in the July series. That will only come in August series, because that's my gut feeling. Definitely, because always, even if Reliance contributes to the Nifty by about 50, 60, 70 points, you have the balancing, because always the tactical trades are there in the form of HDFC or in the form of ICICI Bank, where the index management always happens. So I'm keeping my finger crossed. Happy, if it touches 10,000 in this series, but it is most likely in August series. But tomorrow, keeping a positive bias on Reliance Industries with a minimum uptick of anywhere between 3 to 5%.
Okay. Sudeep, you would be looking to revise your numbers and your initial thoughts on where the stock could settle?
Yeah, if you see this quarter, the number were above our expectations, so we would be in the process to revise our numbers slightly upwards. But if you look at our numbers, our estimates of FY19 are EPS of around 108 rupees. So even if we give about 16-17 times, which gives our target price of 1650, and which may go upwards once we come out with the note post anticipate.
Okay, Sudeep, thanks a lot for your time. Paresh, thanks to you as well. Prakash, thanks a lot. Been a long day, of course, but Mr. Tulsian, thanks to you as well for taking time out and talking to us. So the sum and substance of the numbers from Reliance is, of course, standard disclaimer flashing on the screen, is that Reliance has beaten estimates on the consolidated front on net profit, and that's because both on Petchem and refining, their performance on the EBIT front is above estimates. On Petchem, it's beaten estimate by a margin. On refining, it's beaten expectation by a huge margin, and that's because of the gross refining margin. There's some disappointment in terms of throughput. So essentially, the big number is coming purely on account of margin, not on account of volume. But the consensus of our experts is that the stock should open about 3 to 4% higher in tomorrow's trade. Tomorrow is also Reliance's AGM as well. So it promises to be an interesting Friday. Thanks a lot for watching our coverage on Reliance's numbers.